Happy weekend, everyone. Welcome to CTI Market View. We'll be analyzing the price action on Nifty, Bank Nifty, and review the global charts. In the commodity session, we'll cover the gold and the oil charts. Further, we'll also look at the sectoral summary for last week and review some trending stocks for the upcoming week. Well, friends, if you're new to my channel, please subscribe and hit the like button, and you may also post your valuable comments in the comment section. Well, Nifty managed to close at 19,794 level. So it is facing a very crucial resistance of 19,800 levels. As you can see from the price action chart, we had a very good run up from 18,900 levels. So this was the zone where Nifty took a very strong support. After that, it breached this 21 DMA, took a very good support at 21 DMA, and then now it is facing a very good resistance at 19,800 level. Having a look at the 15-minute chart, you can see the price action is very clear. The market is trying to be range bound. This is a very good range for Nifty to test. So the immediate support at around 19,500, it's a very crucial support. Beyond that, 19,350 and 19,250 are the important supports. In the resistance, 19,800 is an important immediate resistance for Nifty. 19,950 is another next resistance, and 20,000 is the second level, is the third level which Nifty can breach. For the price action for Nifty in last week, you could see the Nifty has been range bound for this week. Looks like the weakness is setting around Nifty, and we can expect that Nifty will correct to around 19,500. This could be the level where Nifty can drag for the upcoming week before it can resume its upward trajectory. Right now, there is no big negative news in the market, so Nifty can be expected to retest the zone of 19,500 before it can resume towards its upward journey of to 20,000 levels. So right now the bulls are totally in control of Nifty, but some amount of minor correction is required in the market before the bulls can resume to take the Nifty beyond 20,000 levels. Having a look at Nifty option chain, you can see good amount of call rating has been taken place. 19,950 and 20,250 are a very good call rating volumes have been taken place in this zone. This was the Friday call volume call rating. So we can expect some amount of weakness in the market for the upcoming week before Nifty can move towards 20,000 levels. Having a look at Bank Nifty, well, Bank Nifty is an immediate dragger for Nifty. You can see a very good weakness which is still being settled in Bank Nifty. The Nifty did Bank Nifty managed to close at around 43,770 levels, but it has not really breached this decisive 21-day DMA. So we can expect this very important hurdle for Bank Nifty. I'm expecting some amount of fair correction in the Bank Nifty. Having a look at all the Bank Nifty stocks, the internals of Bank Nifty is quite weak. So we can expect some amount of correction in Bank Nifty, and I'm hoping that 43,000 would be a very good support level for Bank Nifty. So Bank Nifty might be a very good dragger for Nifty for the next week. So have a look out for this important support: 43,000, 42,500, 42,100. Then we are having a very crucial resistance at 43,850, 44,600, and 45,000 are the immediate resistance zone for Bank Nifty. Having a look at Bank Nifty option data too suggests the same. You can see good amount of call rating has taken place around 44 100 and 44 300. So the market is quite right now quite neutral in the option chain analysis. The marketplace might try to keep the Bank Nifty on a sideways note. Well, talking about the top gainers, the Hero MotoCorp was closing at around 6.5 percentage. Bajaj Auto also gained around 5.3 percentage, and Bharat Petroleum was an interesting surprise up move from Bharat Petroleum. It gained around 5.2. On the top losers, we could see that Cipla had there was a sharp fall in Cipla around 4. 1 percentage. The oil and gas was the next company with around 3.8 percentage. So you could see there is a mixed of action in the last week, where we had equal number of top gainers as well as equal number of top losers. Well, having a review of Nifty Midcap, the Nifty Midcap seems that the bulls are back in Nifty Midcap. You could see good amount of buying which is happening in the Nifty Midcap, and the fall which we were expecting in the Nifty Midcap, which everyone was talking about, has not really happened. And you could see continuous amount of buying which is still persistent in the market in the mid cap and the small cap sector. So the same is visible in the Nifty small cap as well. Good amount of buying is available in the small caps stocks also. Some stocks are way back to their normal positions, and you can see that the small cap is due for a small correction to this zone before it can resume its upward trend. So clear cut bull trend is still available in mid cap and the small cap sector. Nifty appears to be on a sideways to a small corrective zone. Well, moving on to the US charts, the US chart, very good bullish momentum is continuing in the US charts. You can see 15,970 was the closing level of NASDAQ. Some amount of minor correction can be happening in, we can be expected in NASDAQ at around 15,000 level before these levels can be breached. But for now, very good strength in the NASDAQ and the Dow chart as well. So this is a Dow chart. Even the Dow chart is very bullish. So 35,355 is a very strong note for the Dow to close at, and we can expect the same to be continued for this week. A minor correction is also expected in Dow. We can expect 34,000 levels, a very good retesting zone for the Dow, and from there the bullish momentum can continue in Dow as well. Having a look at the international charts, so FTSE was closing on a very sideways note, no big bullish momentum in the UK chart, whereas the Germany chart was very trending. You can see good amount of price momentum, very good recovery in the German charts, and Nikkei is also trading at a positive note. You can see a very good momentum in the Japanese market, and the Korean market is also inching towards a bullish momentum. So you can see a very fairly bullish momentum has been created in all the international charts. So the news of the inflation cooling down in the US markets has given a positive hope for the entire global charts. Moving on to the currency zone, you can see the rupee has closed at around 83.36 levels, a very flattish node. So no big action in rupee. It is since August, it has not gone anywhere. So it has always stayed in the range of 82 to $83. So we can expect the same sideways momentum in the rupee and dollar chart. The gold is seemingly very positive. The gold closed at around 2000 levels, and there is a very positive momentum in the gold. So it might take some sort of support around 19750, 1950 levels before it can resume. Right now the gold chart seems to be very strong. This pullback is a very strong pullback, a very strong pullback, and this zone is a very supports, it's a very good support zone. And next week you can expect some very good strength in the gold chart. We can expect levels of 2050 levels and 2100 levels beyond. So bullish momentum is resuming in the gold chart. And talking about the Brent chart, well, the Brent, the negativity here set up in Brent chart, we were discussing that 84 levels would be a very good support level for the oil. But right now it managed to breach beyond its $80 level, and then took a retest zone of 84, and then from there it has cracking down. So looks like negativity is setting around the Brent oil. So Brent oil seems to be weak for a couple of months from now. Well, having a review of the market summary, you could see bullish momentum in Nifty, Bank Nifty, the UK charts, the German charts, and Nikkei, Kospi were all in a very good positive momentum. The mid caps and the small cap of the Nifty were also in a very good momentum. The Nasdaq and Dow all closed in positive zone. The rupee is not going anywhere; it's in a sideways trajectory, and gold is looking slightly neutral bias. It can turn positive this week, whereas the Brent oil is quite looking weak right now. Moving on to the sectoral summary, you can see that almost all the sectors are in green. They are above the 21 DMA. Only the private banks is a laggard over here. The stocks of HDFC Bank, ICICI, Axis are all still below the 21 DMA, and there is still weakness which is continuing in the private sector banks. So we can expect some correction in Bank Nifty. Whereas if you move to IT, it is showing good amount of positive momentum. But more than IT, I would say the pharma is one sector which is showing very positive momentum. You can study the chart of Dr. Reddy, very strong chart. Divis Lab is also showing good amount of recovery. So very good time to enter in Divis Lab right now. In the FMCG sector, still there is correction, but these stocks are yet to resume their bullish momentum. But apart from that, healthcare stocks, I am liking the chart of Max Healthcare, a very good chart. Apollo did break out its level, so we are still waiting a good entry point for Apollo. But currently, you can see the chart of Max Healthcare, a very good chart in the healthcare sector. And in the metal sector, the Tata Steel has recovered from its lows and it is settling to a good level. And moving on to the auto sector, the Bajaj Auto and the Hero Motors were showing absolute bullish momentum last week. You can say good run up in Hero Motors. Talking about the auto ancillaries, Amaraja is one stock which I'm tracking, and seems to me that the bullish momentum is just returning in the stock. So a very good chart to enter. We'll be discussing this chart in our independent view stock analysis chart. And that's it for the sectoral summary. Moving on to the independent stock analysis, let us have a look of some of the charts which can be trending for this week. The first on the pack is Dr. Reddy. A very good bullish momentum in Dr. Reddy for last week. You can see a very these are all bullish flag sign which was given by Dr. Reddy, which confirms that this chart can resume its bullish momentum. So a very important support of 5,400 can be retested, and beyond that, Dr. Reddy will be a very bullish stock. So I will be waiting for around 5,500 to make an entry in Dr. Reddy. The second of the pack, I have taken Amaraja. A fantastic breakout has been given in Amaraja. I was expecting this levels of 650 to be breached, and it has beautifully breached this level. So the bullish momentum can be expected to continue in Amaraja as well. For us, 60 level would be a very good entry point. We can wait up to small recursion because there has been a continuous uptrend in Amaraj. We can expect 650 levels. That would be a good buying zone for Amaraj stock. But I'm expecting a very bullish momentum after a very long time in Amaraj batteries. The third stock is the sugar stock. The sugar stock was being discussed for more than 2 months right now. We were tracking the stock somewhere around 440 levels, and it took a very good correction at this level, testing its 200 DMA. After that, the stock turned up to be bullish, and you could see a very positive momentum, a very big swing, big momentum in Balrampur chili mills. So we can expect some favorable correction of around 430 levels before it can reach its 500 levels. So 430 would be a very good zone for us to make an entry in Balrampur chini mills. In the Tata Chemical stock, I was expecting that this stock will recover its level of 1,000 rupees, but still it is trading well below its 21 DMA. So currently it has consolidated in this zone, and unless there is any breakout in this level of 960 to 970, there won't be any more bullish momentum in this stock. So I am waiting for these levels to be breached before we can decide the direction of the Tata Chemicals. Currently, this is on hold, and I would like to see the further price action on Tata Chemicals. The next in the lot is the Pidilite Industries, a very good stock to be discussed. You could see that it tested the support of 2,300, a very crucial support. After that, there was a bullish momentum in the stock, and it formed a very strong range just around 2,400 level, and it did break this level, and it is facing resistance at around 2,500 level. We can see some amount of correction in the stock to just a small correction around 21 DMA, and before it can break this level. So this is a very good stock for the upcoming weeks, and this zone it's attracting quite good valuation in Pidilite Industries. So this is one of the stock seems to be very positive for the upcoming week. The last stock in the discussion is hey Hindustan Unilever, a very good defensive stock in the FMCG sector. The stock has been in consolidation for this entire year, and it took a very strong support somewhere around 2450 levels. So this is a very good accumulation zone for the stock, and currently the stock just managed to close above its 21 DMA. But unless this level of 2500 is breached with a good breakout, there won't be any bullishness in this stock. But currently this stock is offering a very good value buy at around 2500 levels. Well friends, that's a wrap of this week analysis. I hope you found the content useful, and please do subscribe and get regular updates. Have a great week ahead. Thank you.